Good day, traders. We are presently looking at DAX 30. That's the German 30, German stock index. And interesting thing about that, which I was just pointing out to traders earlier on, is that this market, if you look at the hourly time frame, because of where it opens in the morning at a quarter past the hour, depending where you are, of course, in the world, but on MT4, 3:15. So the hourly candles are going to be changing at every quarter past. So if you trade the hourly and you pop it up and have a look at the top of the hour, you may wonder, hang on a second, I thought this particular candle was closed and it's still going on. That's because of the quarterly cycle. So this particular candle opened 15 minutes ago, 15 minutes ago, and that's the present hourly candle. So I thought I'll just point that out. I was talking to traders earlier on who just started looking at the DAX 30. The other thing, excuse me, about the DAX 30, about this index, which is interesting, is that some brokers show you the 40, so they'll have DAX 30 or DAX 40. Essentially, the price structure is the same. They've added 10 additional companies to it, but it doesn't change the price structure. So the prices are exactly the same, whether you continue to trade off the 30 or the 40, it doesn't matter. You just, sorry, let me not say price structures. The price action structure is the same, and the prices would be the same. So you just need to keep that in mind as you go through this market. So just having a look at the present structure, seems we are in a bear channel. Bears are trying to reverse the market. But of course, if the bulls take over and take over that lower high or that lower high, then the market becomes, we'll get back into the trading range that we've had so far. And just depends on who becomes stronger to take over the market. So just from the earlier open, this was the open of the German exchange, open of the UK markets. So it's an hour difference, just to bear that in mind. We also had, looking at I've got news coming up, quite a bit of news, but at the present moment, we don't have any news inside. There's 2:30 orange news, which is a couple of hours from now. We'll have to see how that impacts the market. So we had the bulls accelerating, or the bulls going up, pretty strong bullish move. Every time the bears try to sell, they get stopped out. And after this bull move, we had this trading range. Trading range attempt, by the bears to reverse the market. And of course, the bulls want the market to accelerate up again so they can demonstrate control of the market. We've had lower highs in the market presently. So we are in a bit of a bear channel, but will that bear channel result in the bears taking control of the market and coming back to the open of the day or the low of yesterday remains to be seen. So that's presently what we are watching. Just to go back. Oh, by the way, the other thing that the guys earlier on asked is why the focus on the DAX 30. I might have mentioned it last time, but just for personal health reasons, I've stopped trading. Getting up at 2:30 a.m. every day to trade the Hang Seng doctor's instructions. So I had to find another market to have a look at, and I'm still getting into the DAX 30, but that's a market that I'm presently looking at and focusing on and waiting to see what opportunities that we get. So if you're joining us for the 15-minute show, it's probably new for you to have a look at this market. Hopefully we'll, as we go along, you start to get more and more into its rhythm. Sorry, just grabbing a bit of water to lubricate the good old throat. So if we have a look at, now we can look back and see bullish market, where were the opportunities for the bulls, right from the open, the opportunities. Remember, the thick blue line is what we use to indicate the strength of the trend. It's a faster EMA, stronger EMA. The lighter blue line is the 20 EMA. So if you are looking to jump into a market, you have many opportunities by waiting for the market to get to the EMA. Now, the problem with the structure that we had today is that, with the exception of this candle here, I'm just going to quickly mark it out so that we can talk about it. With the exception of this candle here, we haven't had any other cleaner setups to jump into this market to go long. You could trade in the market, depending, particular decide where to put your stop, whether you're comfortable to have a deep stop or not. Now, why would you have looked at taking this particular trade? If you were in it, if you had not tried to go short, well, let's talk about that. For the bears, first, before we talk about that opportunity in the market earlier on. So depending on what time you came into the market, for the guys on the eastern side of the globe map, the Asian session, you'd have been looking and say, hang on a second, strong bear breakout, and we had lower high, this high to that high, and then we had a succession of lower highs. So all the way up to this particular candle where the market opened, the market had been selling off. Yes, at the end of the day, you can say, oh, we are in a big trading range, but as the market was unfolding, we were selling off. Many other opportunities you could have jumped into this market. So when you came into the open, looking at this, you might have thought, hang on a second, the bears have a chance to continue to sell off. Let me see if I can get into the market, try and get into the market early. You would have been stopped out. But as the market, and I'm going to talk about this long trade now, as the market was selling off, was starting to go up after the sell-off, you would have been thinking that would have been the structure in the market. Maybe, okay, they got all these lower highs. So possibly, if the market gets back to test those levels, the bears might come back in the market, give me a double top. If I get a double top, I might get a lower high, double top, lower high, and look to trade that. So when we got here, you probably have been thinking, well, maybe there's an opportunity for a double top, and we didn't get the double top. Now, the reason I'm pointing this out is, if you were thinking bearish because of this structure that we had earlier on, you would not have been looking to take a long trade. You'd have been waiting for a possible double top. And when you didn't get it, well, when you got that, you would have thought, well, that's a possible double top. Bears are going to continue to sell. Let's see if I can get in top of a trading range and see if the market will sell off. Now, at that stage, if you tried that, you'd have been stopped out. My point is, had you been thinking bearish, when you got this setup, you might have missed the setup. But if you hadn't jumped into any of the trades and you've said, well, I can see how the market structure was earlier on, but let me wait and see if I get a different opportunity going into the in this UK session, you would have probably thought, well, bull breakout, follow through. I am at the top of a trading range. I have a test of the EMA. If I'm going to jump in here, where would you put your stop? Your stop would need to be all the way down here, which would mean you would be looking At the least, you'll be looking to get to a one-to-one somewhere up there. You don't know. I mean, now we're looking after the fact. You don't know that the market will get up to there, but your logic would have been, okay, I'm not trying to get there. I can see all of these structures that I have. I can see these lower highs, because they were in the way. I can see the open of the day. I can see the high of the day. So if I'm taking that trade, then I'm going to be prepared for the market to pull back against me anyway and hold on to my stop. So that's the logic. That's probably what makes when you start to look at charts, when you look at a chart cold, if we can put it that way, you just say, oh no, I can jump into that trade. But when the market is live, there's so many factors to be considered. Now, if you've taken that, another consideration would have been you're going into the open of another exchange, pretty huge exchange, that's the UK markets. So the market can react in whichever way. It could go up, it could go down, because the open of a key exchange is like trade and rate news. So if that happens and you get that, having taken that trade, being aware that you are going into the open of the market, then you need to either hold onto your stop or tighten your stop to beneath here. That's with logic. Expect that you might just get market going up, market coming down, stopping you out. Now, if it had gone up, come back and stopped you out and set up another opportunity for you to go long. What do you do when you get stopped out? You have to take a trade. So I spoke to traders earlier on about that fact that if you get stopped out, especially when you've got plenty of hours in the day, you've got to keep taking the trades. You can't not take the trades. So anyway, let's assume you've taken that and you manage your trade correctly at the open of the UK markets. Tried to break, or we broke above the open of the day, tested the high of the day, if you're looking back to the left, and then tried to reverse. But the reversal failed and the bulls got up. Now, that's the cleanest entry that I mentioned. Anything else is a little bit tricky because we don't quite get to the EMA. So if you saw the market going up and you want to get in, the key thing is just to decide where your stop is. Let's just use this. Okay, so if you're taking the earlier trade, you tightened it before the UK session, and after the open of the UK markets, you get that. Then you got to figure out, well, that's that's where my stop is. So if I'm taking any trade at the market, I got to put my stop here, then work out the appropriate risk. That's how you do it. When you get a little bit further up, your stop can be a little bit tighter. And then, of course, we went into the trading range. And had you taken your trade here, and we eventually, we eventually had that pullback, your stop could have been here, it might have been stopped out here. That is, after seeing this, if you're still prepared to hold on to your trade, which is a prudent thing to do, you can do that. You can hold on to, you wait until you get a reversal and say, okay, now I have a higher low. I can put my stop here, too high up in the forming trading range. So maybe you may not want to have jumped in. So as the market pulled back, you might have gotten stopped out there. If not, if you stay in eventually, you do get stopped out. But that's probably the cleanest trade from earlier on. Then with the trading range behavior, when you get to the top of the trading range, you can start to look for other opportunities. Failed breakout, 2-bar reversal, you could try and take that, or you could try and take that. But when you take in trading range, trades, remember you are now trading a reversal trade. So the early trades, which means you get stopped out more often. So now we are still holding in that channel. We'll see if the bears can continue in that channel, or if the bulls will reverse this whole price action and dominate the market. So thank you, and I look forward to seeing you again. And I'm going to be in trouble because I've just realized I didn't have the video on, but my apologies. We will catch up again. Cheers. Bye-bye.